thanks for coming in and welcome to the show. It's the first time we have you, so if you don't mind a quick introduction to the audience, tell me a little bit about yourself.
Yeah, absolutely. Thanks so much for having me. So I am a portfolio manager at an RIA wealth management firm here in the United States. So we handle assets and portfolios investments for individuals. So financial planning, retirement planning, things like that. And I strictly work on the asset management side. So I don't sit down with clients and talk about their financial plan or anything like that, taxes, insurance, none of that, strictly on the asset management side, where we deploy technical, it's all active, and we use 100% technical analysis to make decisions for our clients.
Perfect. Thanks for that. This is a very much a technically driven conversation. I want to start a little bit just recapping last week with the Fed stating a hawkish pause. Obviously, that was expected by the market, but the reaction still nonetheless saw the dollar go up, bond yields start to strengthen, and that's really hit the stock market. So we'll break that one down, but just give me a little bit of overrun, what you think is next and what's kind of happened.
All right, so I'm going to share my screen for this, so we can go over a little bit about the dollar. US dollar index has been trending higher since about the middle of July, which is when we did begin to see weakness in broad markets. We actually, had a nice little break to new lows here just a few days prior to that. Unfortunately, that did not hold, and now we are moving through this 105 area, which I think is pretty important. If we stay above 105 here, which is year-to-date highs for the dollar index, then that will continue to weigh on stocks, and probably small caps like the Russell 2000. It'll probably weigh on those the most. But overall, I mean, yeah, it will likely continue to be a headwind.
Yeah, perfect. And I was reading this morning, actually, from even last night, about the dollar's completed its first golden cross since July 2021, which could mean that, like you said, it could continue to set higher, cause more problems for stocks. But more importantly, I think we're looking at an average of what the Dow Jones market data looks into, a climb over the next 3 months, or possibly from now till the end of the year. Do you see something like this happen? And typically with such a weak month for stocks, are we going to continue to see a weak performance from now till the end of the year?
Yeah. So, and you had mentioned the Dow in particular, correct?
Correct.
Did I hear that? Okay. Yeah. So, pretty rough time for seasonality. We know that the second half of September, the last 2 weeks, is typically not a great period historically, however you want to divvy that up. But what we do know is that kind of sets up for what is considered, again, historically on average, the best 6 months, which begins in October. So what I would really like to see, and I think will set the tone, is not right now, but if we get in to mid-October and stocks still really haven't started their rally yet, which we would expect, then I think that that's a little bit of eerie foreshadowing, and that we likely end up having a pretty poor fourth quarter. On the Dow in particular, we talk about this 34,000 area, right? And this is broadly speaking, we're not drawing with a fine felt tip pin here, but we're talking about, areas of support and resistance. And if we, we broke above here again, late mid-July, all of that has failed. We are now back below. And I think it's another warning sign that we could maybe have a Q4 that's more similar to 2018,
Hmm.
or at least we had a pretty rough 2018. October was nasty, sideways for most of October was nasty, sideways for most of November. And then obviously we kind of had the big sell off into Christmas Eve, 2018. That was the bottom, but a really rough Q4. Typically, and usually you would see like a 2019, a 2020. Those were good. Those were years. 2022, all years with pretty solid Q4s. But I don't think we're off to the best start here.
Got it. If we look at the very short term as well, over the next couple of days, even tomorrow, we know we have GDP coming ahead on Thursday, PCE, the preferred Fed inflation data, coming on Friday. What do you see there? What do you expect the behavior of the Dow Jones to be? Are we trending upward, or could we be down for even further reversal? As you said, it's not looking very good for mid-October, but what does it look like for the next couple of days?
Yeah, so as far as those, it's anyone's guess as to how the market will react. So I don't have a particular take on, if a certain GDP number is hit, what that means the market's going to do, or if the market does something that'll even hold that. I
Mm.
think we're back to a higher volatility, a little bit higher volatility environment where overnight and early session moves are not necessarily held that long. I would expect the trends to continue downward in the short term, just given that that's where we've been over the last few weeks.
Got it. Perfect. And just to go a bit to the S&P 500, if that's okay,
Mhm.
we're looking at possibly the cusp of breaking significant technical support levels in that index. Possibility of running down to 4,200 in the next couple of days. What do you see there?
Yeah, so these August 2022 highs, obviously a very big area that, today as we're talking, they are being breached. Your next big area here is going to be 4180. This is a huge, huge, huge area. So maybe not as surprising to see these areas up here, but we definitely do not want to see this 4180 area to be broken.
Hmm.
That would be pretty hard because we had a nice rally above that, lots of demand, and we've also given up. We've still got a rate of trend here, however you want to draw it. So are we looking for, hopefully in the next day or two we get a bounce and this uptrend can continue. If that's broken, the next area is certainly 4180 or 4200. And then below that, I think really all bets are off. You get back below 4180, and we are definitely going to probably have a rough November and December.
Got it. I mean, again, just jumping to the last index of the three, the major ones, the NASDAQ obviously had a really good run with the AI boom. That's starting to reverse. You could see some of the stocks starting to feel it, and the Nasdaq certainly as well. Is this a trend that's happening across all three, or do you see a little bit of bounce in the Nasdaq over the next few days?
The Nasdaq, as you said, definitely has been the strongest. It's been the strongest all year. I mean, really, I can argue it's been the strongest for 6 or 7 years.
Yeah.
On a technical basis, it has held up the best. Right here's those same October 2022 highs that we just talked about on the S&P. Well, we're pretty far away from those on the Nasdaq. We can look at this. Let's call it 12,800. It's the equivalent to that 41,800 level. So again, as you can see, we've got quite a it would take another 6.5%, roughly speaking, to get back to those highs, these August 2022 highs.
Yeah.
I would like to see the NASDAQ hold in here. I think best bet is the NASDAQ holds in here. What gives me a little bit of the heebie-jeebies, a little skeptical, is Apple.
Mm.
Do not like Apple up here. Really unfortunate that it couldn't hold these all-time highs. And we continue, again, we're not, we use these as broad areas, but Apple breaking back below this 182 again. As we know, it's important. I know you're probably as tired of hearing about it as I am too, but
Yeah.
the matter of the facts are, it's an extremely important stock that carries a ton of weighting in what these broad indices do, especially the NASDAQ. And we're just really, so here's the August 2022 highs for the Apple. We're, kind of breaking those here today. Yes, we saw that, maybe about 5 weeks ago. But should this stick as a very lethargic bounce attempt, really, we just came up here to fill this gap and right back down. And then the
Right.
second piece to that is equally as concerning is Microsoft, right?
Yeah.
So again, just unfortunately does not hold this move higher, and now you are looking at lower lows. We've kind of got this neckline over here. So these are definitely two stocks that need to fix themselves, or it's just a big gray cloud on the market at the moment.
Yeah, and I've been reading as well that you look at market breadth and you start to see that weakening. I mean, we saw that a while ago. Nothing really happened on the back of that. I'm not sure if you look into this necessarily, but have you seen anything of that sort, and what do you make of it?
Yeah, we've got the lowest breadth in regards to constituents above their 50-day moving average, in the Nasdaq, the lowest that it's been all year. That's where we closed last Friday. I
Mhm.
think like only 20% of Nasdaq Nasdaq 100 components are above their 50-day. It continues to be very bleak. Willie Delweesh, another great technician. The average stock is, this was as of last Friday, the average stock is up 40 basis points for the year, with the S&P up 13.
Yeah.
So continues to be a huge divergence in what the stock market is doing, as it's
Mhm.
gets referred to in the media, and how most people think about it. They get online or they turn on the TV and they see what four major indices did,
Yeah.
and which is fine. That's for the most part what everyone's retirement is tied to, their 401ks, things like that, pensions are invested in these larger indices. But underneath the surface, it has absolutely been a different story for the average stock.
Got it. Yeah. Moving a little bit into the commodities section, let's look at gold. Again, we gave a quick insight around USPCE. We don't know what's going to happen with that number, but I mean, unless without any material change there, we could probably see gold remaining range bound. I'm looking between 1913, 1947, possibly. But what do you see? Are we expecting more strength or actually weakness, given the fact that the dollar is continuing to do well?
So I think you bring up a great point. We're first off, yes, we're absolutely kind of stuck at this. Now this is in US dollars, but stuck at this, we'll call it 2000,
Yeah.
$2,000 an ounce. And a wider range here that we've been building over the last couple years, right? And we can take this all the way back to really 2011. So
Yeah.
we've just been consolidating around these big highs, long-term highs. So I'm going to put this on log scale for everyone. Yeah, and with strength in the dollar, and we see this, right? If we zoom in, short term kind of starting to break down here. Obviously, we want to see this hold, but strength in the dollar will be a headwind for gold and precious metals. Silver not a ton better, right? Consolidating. It's just been up here for a few years now. Hasn't really gone anywhere. It's much further below its 2011 highs. So gold, if silver was behaving the same as gold, we'd see silver up here around 42, 45 bucks maybe. It's still down at 22, very lethargic. You would in a bullish environment for precious metals, you would ideally, historically speaking, see silver outpace gold. We would want to see more demand for the risk on assets.
Right.
And we just continue to not. Here's silver versus gold over the last 13 years or so, and we continue to just kind of muddle around. Really no desire to own either until something on the charts happens here.
Yeah, got it. On that, same conversation, we look at oil. A huge conversation started that one. Look at WTI crude oil, more specifically, hit the $91 for the first time in 2023. It showed a little bit of weakness today, but I mean, you could only talk about the short term here. We don't know where it's going to happen next. Some believe it's going to go back to 100. Some believe, we don't know, but a big conversation around what it could do to inflation. So what are we seeing first in the short term, and what do you think that could mean for the Fed even next, or even the economy?
Yeah, so short term, very strong. Clearly, we've got, we consolidated a nice base formation here. Really, over a 9-month span, going back to last November. A couple attempts to break out above 83, 84. We finally do it, and yeah, it's a pretty big move. So the next big spot here is going to be this 91, same area you mentioned, 91, 92-ish. Again, these aren't perfect, but we've got areas of support and resistance.
Yeah.
And I think that this so far is a pretty healthy consolidation here. We got up here. We haven't seen an immediate sell-off over the last week or two. It seems that we might just want to consolidate here under 90, 91 bucks for a little bit, and then we would expect that trend to continue. That's what trends do. We move higher, move lower, consolidate, and then usually resume in the direction of the overall trend. So maybe conserving a little energy here. And what's fascinating is this is another instrument like gold denominated in dollars. So a stronger dollar, you would think that would have a more of an impact on crude oil prices.
Correct.
And really has not. And maybe it has. Maybe it is a headwind. And even with a stronger dollar, we've still got oil at $91 a barrel. Well, if we had a weaker dollar, would it already be at 100? There's no way to know that. But this is actually the strongest correlation between the dollar and crude. They're typically inversely correlated. But we've been on months of a positive correlation for really the first time in over 20 years. So do we continue to see the dollar and crude rise together? I'm not sure, but that is the current trend.
Got it. Yeah, it's funny when I was listening to what the Fed chair Jerome Powell had to say last week. He's basically saying if energy prices increase and they stay high, it's things like that we have to monitor. So it's still very much on their hawkish stance, and you never know what that could do to inflation and what they could decide to do after that one. But yeah, certainly something to keep an eye on. Like you said, I think the expectations are to go up to $100. Talking about dollar strength again, going back into the FX space, euro dollar, there is a kind of a bullish scenario maybe for the euro, depending on some decisions that has happened. That's not really the case. 1.06 seems to be the one testing now. It's broke slightly below it. Do we have risk remain skewed towards 1.05, or where are we going next in the short term?
Yeah, so we've clearly got a pretty decent range here to work. Broke down, late September 2021. Yeah, this 1.05 area, very, very big area. Got to hold here, or below that, you're probably looking at 1.02. If we can go back, I mean, these are some pretty big, maybe something further along in here. If we go back to 2016, pretty big areas in here. So yeah, if we go all the way back, euro dollar, you would want to see it bounce in here somewhere. Obviously, this failed breakout here above 1.10 did not hold, and as we know, from failed moves come fast moves, so quickly right back down to 105.
Got it. Yeah. I mean, we probably below that level, we'd start to see a narrative back to, are we going to reach parity or not? And
Yeah.
I think that would
Yes,
become
that was such a big talk last year. Gosh, I remember that.
Yeah, we'll see. I guess it's coming back at the end of the year again.
Yeah.
You look at the pound as well. I mean, obviously, last week you had the Bank of England follow the routes of the Fed and pause, even though that was unexpected. And some people have speculation that they've not done the right thing. But again, more weakness to the pound, more strength of the dollar. What do you think is going to happen here? Do we also see consolidation, or could we see a bounce back down?
Yeah, so clearly here we've got a big multi-year level at 1.2. Would have liked to see this hold somewhere in these areas, not thin lines like I've got, but we want to use these as areas. Unfortunately, yeah, broken. I mean, you've had a strong trend off the bottom like this, so it does seem to be rolling over. Is it just a retest? Who knows? So yeah, a rough last 2 months, but not a lot of severe damage yet. Not nearly as bad as we were last year.
Got it. Yeah, last $1 yen. Probably heard a lot of it this year with the Fed hawkish pause, but also the Bank of Japan rigorously holding on to its dovish stance no matter what the situation is. We see it probably backtracking to 150. Do you see that happening this week?
Yeah, so back to multi-month highs. As you said, 150 kind of the line in the sand. I would be surprised if we just zoom right through this. We're talking about weeks and months, but maybe over the next few weeks, maybe next couple months, a pause up here in this area, and then at some point an eventual move higher.
Got it. Well, that's basically all the questions I had from a technical perspective. I'd like to take a moment for you just to see, what are you looking at over the next weeks, and even months? Is there anything specific you'd like to call out or highlight to the audience?
Yeah, so we touched on these a little bit earlier, longer term view, and this was kind of our stance going into August, is these big Q4 necklines. You can see them on all the major indices, but here's the S&P. So we were not able to break above this. The 4,500 area on the S&P got aggressive in here on the break above 4180. As we can see, lots of resistance. The break above 4180, it led us into a nice, really for a couple months, rally. And unfortunately, I would have liked to see this consolidate a little bit better, maybe up here. But we are losing this range, as we pointed out earlier.
Yeah.
But a good reminder here is that, hey, so this is a 200-day moving average, right? We have an upward sloping 200-day moving average. I do think the long-term trend is there.
Mm-hmm.
And we could certainly see the S&P come back and test both of these, maybe into next week if things get rocky enough. But we absolutely want to see this hold. You don't want to go below 4180, and you don't want to go below a 200-day moving average.
Got it. Well, that's all for today, Ian. We really appreciate your time. It's great to have you in the show. We look to have you again. Thanks.
Thank you so much for having me. It was a pleasure.